Let's crack on with the weekly breakdown for yen pairs. So we'll start off with fundamentals and then we'll jump onto the charts. So currently yen is weak. This is on the back of risk on flows. So recently we've seen a lot of optimism in the markets with trade war optimism and also strong equities and AI earnings. And if you look over the weekend, there was more optimism. So at the end of last week, we had yen and dollar with some optimism and some deals with EU, and also over the weekend more EU optimism, but also China is close to a deal and there is talks by another 90-day extension basically. So not only do you have the risk on flows, but also if you look at yen, so we'll have a look at yen. We've got yen rates this week, and yen BOJ is hesitant to hike as they have a fragile economy. GDP is in the shits, manufacturing is contracting, and also CPI is coming lower, so they don't need to hike to control CPI. And if they do hike, they are risking hurting the already fragile economy. So not only do you have the likelihood of lower rates, and also because of that, it promotes carry trade flows out of yen as well. Yen with relatively low rates, and then you've got dollar with the highest rates. Money flows out of yen. People take money out in yen and convert it to dollar, which has higher yields. So fundamentally, yen is weak, and with the risk on optimism, it's likely to remain weaker. We'll have a look at the yen index at the very end. So with that in mind, what does that mean for yen pairs? More upside, because it's the quote currency, so you've got the base and the quote, and if yen gets weaker, yen pairs go higher. That doesn't mean you are aggressive and reckless with the buys. It just means that you try find reason to get into buys and hold on to them. We are likely to see a push past the previous highs. So with that in mind as well, I want to try get a buy which I can hold on to past these highs. In terms of tech is always the exact same. You start off with the key levels, and just for this breakdown, I will do some fresh analysis on GJ on my thought process. So we'll just borrow this box. So the first thing you start off is on the weekly time frame, plot all the weekly levels that you can see. So we've got one level over here, we've got an area over here with these two wicks, we've got a level over here, and already this is 600 pips away. We'll plot this just for the sake of it. There's no point going any further because there's no point. And before this, I can see there's a daily level over here. That's all the levels sorted. That's it. And then if you go down onto the daily, as you can see, these are all the levels I've already fucking got. Then you plot the fibs, the biggest fib, the most obvious fib, and the most recent fib. So we'll start off with the biggest fib. And as you can see, the 38 aligns with this level, which also has two SMAs, sorry, a 200 SMA and also the 200 EMA. So a double moving average and also a big fib and a key level. So what I will do is I'll make this green, because in terms of confluences, this is a solid level. It doesn't mean that this is more likely to deliver than something else. In the right context, this will get absolutely smashed. And also what you can notice is that there's 100 daily EMAs coming to this level. Then you plot the most recent fib. There's no point plotting this fib. It's way too aggressive and it's already been done. The more obvious fib is this one. And as you can see, the 61 is pretty much on this first daily level that we do have. So this is technically where the level is. 38 is delivered, 50 is delivered. So it is a valid fib to use for reference. Now, for me, this is already more than enough context to build a plan, but you can look at other fibs as well. So just for the sake of it, we'll have a quick gander at a few other fibs. This I wouldn't really use, but if you look at it, the 50 fibs on this level, the 61 is over here as well. And one thing that you'd notice is the 23 is at the same place as this 61. You can plot a fib from here. It's of no interest to us, and even this is a slightly weak fib. Is there a level on the 23 and the 61? A very, very weak level. So we'll plot this just for the sake of it, and what I'll do is I'll make it a bit more opaque. Now this is already all the tech done. It's fucking as simple as that. You don't need to make it more complicated than this. Now, since we know yen is weak and there's likely to be more upside and you need to find reasons to get into a buy, the first buy is 150 pips away from weekly open. And for me, for yen pairs, an overextended move, you can look at the ATR, but an overextended move is 200, 250 pips. So for me, this is way too close to weekly open. So this is a trade which I will only take where if there is something on top of tech to put the odds in my favor. If there isn't, I'd simply want a breach. Now, this is a very weak level in terms of tech as well. How far away is it? It's only 210 pips. So what I would do as well is, just to play a bit safer, I'm going to do it like this. Because the last thing I'd want to do is take this, get stopped out, take this, and then take the one after. For the sake of it, I'm just going to want something on top of tech to improve the odds of success in my favor. If not, something like this, where I just want to breach. But if, let's say, the pink arrows, remember, it's not just timing or a match, it's an overextended move as well. So if we see a push higher and then a strong push down, this can deliver the pullback, but that's why I've got the pink arrows, because I need something on top of tech. And if you take this, this area is a solid arse backup. But if this area does deliver the pullback, then you'd want a breach of this to improve the odds of success for the zone after, where you will still find some reason to get into this area if there is something on top of tech. Now, remember, we've got rates for yen and dollar this week. That's why I have got two pink arrows for these two trades, because I'd rather play it a bit safer. Because even if, let's just say, rates blast and push to this area, I'm definitely going to be taking this regardless of whatever the fuck the rates are, because there's high odds of profit taking. People need to cash their positions. It's a strong daily technical level with an EMA and also a fib. I'm a bit brain dead. I've already forgotten if there is a fib on this level. There isn't, but if I'm here, maybe. See, here you can fucking force the 38 and the 50 as well, and this 61, but it doesn't matter. It's this in itself is more than enough context for me. So even with rates, I'm taking this with this as a backup. If this does deliver a pullback, yes, if there's a strong 250 pip move into the level, I'll take this, but that's why you've got the pink arrows. If it does do a small pullback and then continues to push lower, then I'd want timing or a match, if not breach, to then improve the odds of success for this area. For highs, it's very straightforward as well. If you plot the 61, even though it's already been done, which is on this level, for this you do have to go onto the 4 hour. If there is a breach of this area, then I'll take this. But again, it's going to be something where I'll just put the pink arrow, because yes, you need an overextended move at the very minimum. If not breach, to take the level after. And what is the next sell level that we do see? We'll ignore everything on the right and we'll first plot this area. So this area has already delivered the pullback. Now let's look at everything on top of this. We'll start off with the most obvious levels that you can see. You've got this high from last year when the carry trade situation happened. And then after that, what did we see? Price push lower, done a pullback to this area, push lower, done a pullback to this area. So already you've got two daily levels over here and over here. You can refine these, and I'll send charts with more detailed breakdowns and updates as well. And you've also got a break retest over here. You also do have a 4 hour level over here, which I'll make this pink just for the time being, because if you go on to the 4 hour, what the fuck, and you zoom out, very weak level, but there has been many instances where 4 hour levels do deliver a pullback. Look at this. Look at this 4 hour level. I doubt you'd be able to see it on the daily. There's fucking nothing on the daily. I think it's just this. But there's been many instances where there'll be a 4 hour level that will deliver. This 4 hour level is a good example. So look at it over here. And I remember I had this and I didn't take it. But in the right context, it was because it was over the weekend. There is no 4 hour level over here. What the fuck am I tripping? Man, that's some bullshit. Where are we looking? What the fuck? Plotted it over here. We put an arrow to it. Yeah, there you go. Yeah, so it is that. That is the one I was talking about. That was so fucking confusing. So yeah, very, very weak 4 hour level, but in the right context, it will deliver the move. And what was that context in this scenario? It was, there was, yeah, see, I keep missing this. Why do I just keep, yeah, why does this keep moving higher when this, what the, oh wait, never mind. There we go, because I was looking at this. Yeah. So it was because it was end of session and there was timing. I think it was on Friday, and then the following, let's look at it, the first, it was end of quarter, sorry, end of, yeah, end of quarter. That's why I didn't take it. But yeah, point being is, even though it's a very weak level, in the right conditions, it can deliver the pullback. Because if we do get a breach of these highs and price is now overextended 250 pips, which already we know is overextended for yen, do you think it's not going to deliver the move? Are you really going to wait for price to push another 90 pips to the next level? Especially if you might even have timing or alignment, which makes it easier to take this trade. So you can do something like this, or if you want to play it safe, if you're not confident with it, then you can take it with timing or a match. But then over time, what you'll notice is you'll miss trades like this, even though it's a 4 hour fucking hell, I need to slow down. Even though it's a 4 hour level with the right context, it can deliver the pullback. But if it does do a pullback from the highs, then a breach of this to improve the odds of success for the zone after. Exact same process as always. I have broken down these plays in different breakdowns, and I'll send my charts with the actual stop loss entry and take profit and so on. Now let's look at other yen pairs for potential alignment. UJ has made the move from the 50 fib, but if you see a push lower, breach of the 50, improves the odds of success for the 61 plus break retest. It's currently 250 pips away. So if you look at GJ, 230 pips, maybe if you see some dollar weakness, it could push UJ more, but for this to align with UJ, it has to be yen driven. So you have to look at other yen pairs and also the yen index. But this could give some insight into a potential match for GJ. If it does do the pullback from the 61 fib, then you'd want a breach of this level to improve the odds of success for this area. And if you do take this area, this is the backup. And if price does do a pullback from the 50 fib, then you'd want a breach of this to improve the odds of success for this one. So how it should actually be is like this, with this as a backup, with this as maybe you can take it with timing or a match, and even the lows could give you some potential insight. How far away is that? 170 pips away, 100. Yeah, any of these zones could align with UJ on the lows. And if it does do the pullback from here, then what the hell? Breach of the 61 to improve the odds of success for this, with this as a backup, with this as a potential with a match. Now it might be dollar driven, where you do have to look at dollar in terms of, if we do, in terms of sell case scenarios, if we do see some more upside, how far away is the highs? 140 pips. It's not good enough for me, but again, it can give you insight into a potential match. If not, breach to take this area. And just for the sake of time, because I was on a live call before this, I'm not going to break down the whole logic behind this. It's broken down in previous breakdowns, but essentially no reaction from here to take this, with this as a backup. Same process, same shit, some shit like that. Just watch the previous breakdowns. I will do an update if we do start to see some more upside. And finally, in terms of EJ, zones to match remain the exact same. This high will definitely be of interest. So you've got a level over here. Now this is a wide zone actually, because you've got a historical level after that as well. And I've already these have been planned from last year, by the way. So if you see more upside, it'll be a good example for levels which I've marked out years in advance. Holy shit, it'll actually be almost a year. That is crazy. But the previous highs, well, the 75 psychological level, this is where the zone technically does start, and this is a wide zone. If you've got other yen alignment as well, great. But the top of this zone is essentially, if you just scroll all the way back, it's this wick. So, what the fuck? Why do I do this shit to myself? I've just lost myself. Yeah. So the 70, no, never mind. It's this area. So yeah, it's a level from 1990 fucking two. This was the level which did miss, but there is also a wick higher up, which is the top of the zone, and then past that you've got these levels as well. And now finally, in terms of the yen index, let me just load it up. If we do see more downside, lows, not the best alignment, but past the lows, this wick, well, sorry, this area. And then you've also got this area. So they're very close and it's the same zone, but the deeper you push into it, the more potential it has for the yen pullback. And then past that, you've got this level. Very simple, very straightforward. Use logic, don't overthink it. and have a solid week.